Want to cash out your crypto in Canada without getting crushed by taxes? While you can't legally avoid paying taxes on crypto, you can reduce your tax bill. In this video, we'll break down 8 legal ways Canadians can pay less crypto tax in 2025. Alright, but I have to say before we go any further, Koinly presents this information for educational purposes only. This is not financial or tax advice. Always seek professional advice for your situation. Alrighty, in Canada, crypto is taxable. The CRA treats it like a commodity. So whether you're trading, selling, or earning crypto, you could owe either capital gains tax or income tax. The good news? There are smart, totally legal ways to minimize what you owe. And remember, Koinly is Canada's #1 crypto tax calculator. It automatically tracks your gains, losses, and income to help you file accurately and optimize your tax position. All right, with that plug out of the way, let's talk about number 1, HODL, the easiest way to avoid a tax bill. If you don't sell, trade, spend, or gift your crypto, you don't trigger a taxable event. Holding your crypto long-term means you won't owe tax until you actually dispose of it. Simple, but effective. Number 2, harvest your losses. If your portfolio is down, you can use those losses to your advantage. Selling crypto that's dropped in value allows you to realize a capital loss, which you can use to offset gains. Just be careful of Canada's superficial loss rule. If you buy back the same asset too quickly, the CRA can disallow the deduction. Okay, number 3, offset losses against gains. Capital losses can be used to offset capital gains, and that includes crypto. So let's say you made $500 on Ethereum and lost $500 on Bitcoin. Those cancel each other out. You only pay tax on half of any capital gain in Canada, so offsetting can significantly lower your total tax. You can also carry losses forward indefinitely or back up to 3 years to reduce taxes in other years. Number 4, contribute to an RRSP. When you contribute to a registered retirement savings plan, you can deduct that contribution from your taxable income. And this in turn lowers your tax bill now. You'll only pay tax when you withdraw later, usually when you're in a lower tax bracket in retirement. It's a smart long-term move for crypto investors. Consider a Bitcoin ETF. If you'd rather not deal with wallet security or transaction tracking, a Canadian Bitcoin ETF can be an alternative. You don't directly hold crypto. You're investing in a fund that tracks its price. Gains are still taxable, but ETFs can be easier to manage and integrate with your RRSP or TFSA accounts. Just watch out for management fees. They vary between providers. Okay, number 6, donate crypto to a charity. You can also give to a good cause and reduce your tax bill. When you donate crypto to a registered charity, it's considered a disposition, meaning you might owe capital gains tax on the increase in value. However, you'll also receive a charitable donation receipt for the eligible amount, which can reduce your taxable income. Just be aware that if you donate within 3 years of buying the asset, the receipt value may be limited to its original purchase price. Okay, number 7, stay classified as an individual investor. The CRA taxes crypto in 2 ways, as business income or capital gains. If you're seen as running a business, frequent trading, promoting products, or investing commercially, your entire profit is taxed as income. But if you're an individual investor, only half of your gains are taxable. So avoid short-term repetitive trading patterns if you want to stay in the capital gains category. Alrighty, number 8, use a crypto tax calculator. Finally, the easiest strategy, use technology. A crypto tax calculator like Koinly automatically tracks your transactions, calculates your gains and losses, and even shows unrealized losses you could harvest before the end of the tax year. You can test it out for free and only pay when you need the CRA compliant report. It's the smartest way to simplify your crypto tax. Okay, so what's your crypto tax rate? The CRA doesn't have a flat crypto tax rate. It depends on how your earnings are classified. Capital gains are 50% taxable, while business income is fully taxable. Your overall rate depends on your total income and province. Koinly helps you work this out automatically and even simulates how different strategies could impact your final tax bill. That was a lot of information. So while you can't completely avoid paying crypto tax in Canada, these 8 strategies can help you keep more of your profits legally. From hodling to harvesting losses to using tools like Koinly, a little planning goes a long way. If you need further assistance, definitely check out the resources I'll link down below. If you found this video helpful, consider dropping a like, subscribing for more crypto content, and I'll see you next time. Peace.